I would now request Mr. Nilesh Shah, MD of Kotak Asset Management, to take the dais.
Hi, Mr. Chaudhary, Mr. Anand Rathi, Ritesh, Rakesh, and Mr. Agarwal. I don't have any slides. I'll just tell few stories, and hopefully you will get the message behind those stories. So let me first start with the story of what the global world is. Let's assume I am running a restaurant and all of you are my clients. You come to my restaurant once in a week, you are happy, I am happy. Now, because economic conditions are deteriorating, you decide not to come to my restaurant. You are not getting good food, I am not getting good client. So I come out with an innovative scheme that all of you are respectable people. You can come and eat as much as you want, and you can pay whenever you can. Now suddenly, instead of visiting once a week, you are visiting 7 days a week. My business multiplies 7 times. I am happy and you are happy. Even my suppliers are happy because their business has also multiplied 7 times. Even my banker is happy because he has given me 7 times more credit. Is there anything wrong in this thing? Everyone is happy. So obviously the question comes, someone smart in the banking fraternity realizes that when will the money come back for the loan which I have given to this restaurant owner? Now we are all chartered accountants. So I go to my tax consultant, my investment advisor, and say that, look, this banker is asking for money. And he says, no problem, we'll go and do the securitization. So I go to rating agency, get the rating on the portfolio of receivables from clients who are going to pay when they can pay. But I go and place it in the Japanese market. Now my rating agency is happy, my investment advisor is happy, my tax consultant is happy, and even those Japanese investors are happy. So this is how we have created a happy world. Do you think this will sustain? There is such a pin drop silence. Is it a very tough question? Obviously the answer is no. But today central bankers are believing they are God, and they believe this kind of situation can sustain. So let's look at Greece. When you land in Greece, you will see in most of the premises there are swimming pools. But when you go to the Athens municipality, they are all classified as water bodies. For swimming pool you have to pay tax. For having water bodies you don't have to pay tax. Now in a country where people don't want to pay tax, what will happen? In Greece, they have a provision which allows a person of the age of 57 years to retire with 93% of last earned salary as a pension at 57 years of age. Now they have 450 professions which are called hazardous profession. And if you are working in hazardous profession, you can retire at 50 years of age. And even a hairdresser's job is considered hazardous. Now when you run a country like this, there is no surprise that you become bankrupt and you go with begging ball to someone else. So today, the global world is funding growth through debt. And that debt is provided by the government, and that debt is provided by the central bank. We have never seen such environment before. When will this whole thing end? How will this whole thing end? We doesn't know. So keep in mind that the global growth which we are seeing today is funded by debt. It's funded by central banks' belief that they are God. It's funded by liquidity which they are creating. And every year they have to create more liquidity to create growth. Every year they have to create more debt to create growth. In 2008, global GDP was $55 trillion. Today it's $70 trillion. So in 2008 to 2014, 6 years, we improved GDP by $15 trillion. But to create that $15 trillion of GDP, we needed to create $60 trillion worth of debt. So $4 of debt is creating $1 of GDP. Who knows when will the music end? How will the music end? In the hindsight, we know what went right, what went wrong. But today, as long as the party is continuing, enjoy the music, enjoy the free lunch provided in my restaurant. Now let me come to the second question. When I started my career, I went to some senior colleague like Anand Rathiji and said, you give me some worldly wisdom about how to make money. He said that worldly wisdom, chodo ek story sunata hun. So he narrated this story to me. He said, there was a gentleman who called his broker, what's the price of stock X? And he said, sir, 10 rupee. So I said, buy 100 shares. The next day he called, what's the price of this share? He said, sir, 12 rupees, buy 1,000 shares. Third day he called up, what's the price of this share? He said, sir, 20 rupees, buy 5,000 shares. He again called up next day, what's the price of the share? Sir, 50 rupees, buy 10,000 shares. Next day he called up, what's the price of the share? He said, 100 rupee. He said, now go and sell all our shares. He said, whom will we sell? We were the only buyers. Now, similar kind of thing is happening with all of us. I'm sure all of you have bought gold. We are the largest owner of gold in the world. Who will buy gold from us? We are the largest owner of the gold in the world. We are the largest buyer of gold in the world. It doesn't give any bonus. It doesn't give any dividend. It doesn't give any rights. It doesn't grow. Someone asked Warren Buffett, should one invest in gold? And he said, if you collect all the gold produced by everyone in the world, it will probably fill a room like this. Now for that price, I can buy half of America, which produces food grains, which produces talent, which produces industry, which produces innovation. Now, will you be interested in buying a room full of metal? Or will you be interested in buying half of America? I leave the judgment to you. Now, I hope and pray that Indians don't translate into the similar experience which I got from a story of some elderly gentleman. We are paying a huge price for buying gold. In last 10 years, we have imported gold worth $280 billion. In last 10 years, we have imported about $30 billion worth of silver. And this doesn't include the smuggled gold and silver which comes into our country. So as a country, we have exported $310 billion overseas. What is the total FII flow which has come into the country? In the equity market, $160 billion. In debt market, about $70 billion. So we have exported more money overseas through import of gold and silver than what we have received from these foreigners in debt and equity market. Can a country, a poor country like India, afford this? The answer is obviously no. So at some point of time, I hope and pray that there will be dawn of sensibility, rationality to Indian investors. They will stop investing in gold. And hopefully the prices will not correct from current level. They are already 40% down. And we will be able to use this pile of gold in a more productive manner. The ownership of Indian equity will remain in India. There will be money available to our entrepreneurs to set up industry. And we don't have to depend upon foreigners to run this country. The third thing is related to independence movement. Do you all believe that India should remain independent? The answer is yes. 99% will say yes, 1% may say maybe, but hopefully no one will say no. Now today, 25% of Indian equity is owned by foreigners. 13% of Indian equity is owned by foreign corporations like Hindustan Lever or BET and so on and so forth. So about 38% of Indian equity is in the hand of foreigners. With that kind of ownership, do you think we can remain an independent country? Today, you may believe ICICI Bank is an Indian company, but almost 70% plus ownership is with foreigners. Today, you may believe HDFC is an Indian company, but 70% plus ownership is with foreigners. Today, you may believe HDFC Bank is an Indian company, but almost 50% ownership is with foreigners. Now, if you are giving away your economic ownership to foreigners, will you remain an independent country? Will there be conflict of interest? Will there be compromise? Will we have to reinvent Mahatma Gandhi for second freedom struggle? And will he like to come to a country like India now? So I hope and pray that we remain independent in true sense, and that can only happen if all of us start retaining economic ownership of country in India. The third thing is about industry. Today, the God has been kind to India. We have been delivered $40 billion plus oil dividend. Oil prices have corrected for no work of ours, and we are saving about $40 to $50 billion a year. It's almost a penalty goal given to us without any goalkeeper in sight. About a year back or 1.5 years back, if someone would have mentioned that oil prices will collapse by 50%, which one will be the biggest beneficiary? Everyone would have said India. What will be the growth rate? Everyone would have said growth rate will shoot through the sky because oil prices will come down. Now what have we achieved? Growth has shot up, but one doesn't know whether that's reflected into the ground or not. The government tells us that we are growing at 7.5%, but last 2 quarterly result has shown negative profit growth for India Inc. In December 14, we degrew by 4%. In March 15, we degrew by 2%. And in June 15, probably the number will be plus 1% or minus 1%. If I view from a narrow viewpoint of corporate profitability showing GDP growth, then we are technically in recession. So with oil dividend of $50 billion, $40 billion, we are not able to score penalty. We are not able to score goal. There is somewhere a big disconnect happening. Now there are thousands of reasons why that disconnect is happening, but going forward what we need to do so that this oil dividend actually gets converted from penalty to a goal. One, we have to respect trade and commerce. If we see since independence, India has lost its economic relevance in terms of percentage of global trade. We have gone down and recovered, but we are today lower in terms of eminence than what we were before. If I see comparison with China, in 1980, China had more number of poor people than India. And today it has far lesser number of poor people than India. And its GDP is 5 times bigger than India. So if I see somewhere my politician as fund managers and compare them with China, they have generated tremendous underperformance. And despite that, majority of our Bharat Ratnas are politicians. The guys who have alienated poverty, They are the industrialists. They are the entrepreneurs. And how many entrepreneurs have got Bharat Ratna? One, J.R.D. Tata. So unless until you respect entrepreneurs, until you respect industry, unless until we can overcome this Brahminical attitude of disdain on the entrepreneurship, industrialism, unless until we can overcome those issues, I don't think so we stand a chance of converting this penalty into a goal. Today, what have we done with our entrepreneurs? You want to buy land? You will take more time than any other country in the world. You will have to pay a price which is more than most part of the world. After that, you struggle for getting approvals. There are 657 acts under which you have to take approvals for setting up a factory. And no one knows how those rules have to be followed. If after that you are lucky to set up factory, you still have to overcome the highest power cost which one has to pay. You also has to overcome the maximum disturbance in power compared to most countries in the world, including Bangladesh. You have to overcome infrastructure bottlenecks through import goods or bring goods to take out goods. You have to struggle by paying interest rates which are higher than most parts of the world. There are only two countries, Greece and Indonesia, in a comparable universe which charges higher interest rate than India. And after all these things, if you are successful, welcome to the Income Tax Act. And now we expect these entrepreneurs to deliver growth. The entrepreneurs of India today make return on equity of 12 to 13%. If I put money in bank deposits, I'll make 8 to 9%. Do you think people will come to set up industry with all these problems to earn that 3 or 4% extra? That's unlikely to happen. Which is why it's important that the government, the bureaucracy, starts respecting industry and entrepreneurship, starts encouraging industry and entrepreneurship. We want our entrepreneurs to set up industry. For that they require debt, for that they require equity capital. Last year our credit growth was 12%. With that kind of credit growth, how will industry grow? Every year we take about 120,000 crore by way of dividend from corporate India. But they raise 30 or 35,000 crore by way of IPO, of which bulk is taken away by government through OFS and PSU divestment. So I won't give debt, I won't give equity, but please go and set up industry. Earlier we overcome this kind of paradox, better for our growth. Then the GDP numbers which are being talked about will actually start reflecting into corporate profitability. The second thing is about interest rate. For last 7 months, we are having negative inflation on a wholesale price basis. Now RBI is saying that we will focus on CPI, which is fair. But if you are focusing on CPI, then why are you looking only at the repo rate? Why not look at the cost of borrowing for the consumer? You want inflation at consumer end, then let's look at cost of borrowing also at consumer end. Our inflation is about 5%. The average cost of borrowing for entrepreneurs will be probably 12 or 13%. Which country today has 7% real rate of return? Forget about that. Which country has nominal rate of interest at 7%? Very few. So unless until we can cut interest rate, entrepreneurship will not get activated. The third thing which we have to focus upon is providing savings so that these investments can happen. Either we can go to foreigners and beg, or we can stop investing in gold and create that surplus which will come into bank deposits, which will come into mutual fund schemes, which will come into insurance policies and be available to the entrepreneurs of India. As a chartered accountant, I think we have obligation to this country as well as to our clients. If we can shift them from gold into the bank deposits, mutual funds, insurance, I think we'll do a great service to this nation. The other thing which I want to talk about is this tsunami of financial saving which can be unleashed if we can divert people from real investments to financial investment. Last year, mutual fund collected in 1 year what they had previously collected in 10 years. So in 2014-15, we have collected almost equal to the money which we collected from 2004 to 2014. In 1 year, 10 years growth. This is the change which is happening in India today. Today, all of us put together own about 8% of Indian equities. Roughly, let's say that's 800,000 crore. Last year, mutual fund bought 65,000 crore of equity. Over next 5 years, can we buy roughly about 350,000 crore of equity? That looks possible. LIC invests about 50,000 crore in equity every year. Over next 5 years, can they bring 250,000 crore of equity? Quite likely. The Provident Fund and Pension Fund has not invested anything in equity till now. As per their amendment, they can put in 200,000 crore in equity over next 5 years, or even earlier. So 350 from mutual funds, 250 from LIC, 200 from pension. The private sector insurance companies and banks had sold 28,000 crore last year, but they also want to be in business. Hopefully over next 5 years, they will bring 100,000 crore into the market. It could be more, but conservatively 100,000 crore is possible. In the HNIs of India, people like Rakesh Jhunjhunwala, Vallabhbhai, Nimeshbhai, they will probably bring 100,000 crore into market. The demand for equity from mutual fund, from insurance, from LIC, from pension, from HNIs is roughly about 10 lakh crore. The total ownership of Indian equity with retail investors is just about 800,000 crore. There will be still gap of 200,000 crore if all of us end up selling every single share which we own. The government can provide some supply through divestment, but my feeling is that the demand and supply of equity is mismatched, and that will keep prices supported. You as an investor have a choice to stay ahead of the tsunami or stay behind the tsunami. If you stay ahead, you will enter at a lower price and better return. If you stay behind, you'll probably enter at higher price and lower return. So make a wise call. Serve the nation by shifting real investments to financial investments, and make money for your client by staying ahead of this financial tsunami which is coming. Net, it's not that the future is always rosy. We have a lot of potential, but we need to take certain steps to convert that potential into performance. From a mathematical point of view, today we are a $2 trillion economy. If we do well, in 5 years this will become $4 trillion economy. If we do badly, then probably in 8 years it will become $4 trillion economy. Again, if we do well, over next 5 years, we'll make it $4 trillion to $8 trillion economy. If we do badly, probably over next 10 years, we'll go from 4 to 8. So in next 10 to 20 years, we'll see recreation of India. 3 Indias will be created over next 10 to 20 years than what has been created till now. Today we are 2 trillion. Hopefully at the end of my working life will be $8 trillion economy. So there is 3 new India which is being created over next 10, 20 years than what has been created till now. There'll be more Infosys, more ICICI Bank, more Axis Bank, more Kotak Bank, more Sun Pharma, and 3 times more which will be available. And it will be up to us what we grab out of them. This is the potential. Obviously, we need to take steps to convert potential into performance, but that's the kind of potential we are talking about. We are lucky compared to our previous generation that we are witnessing history in the making, and hopefully if we act wisely, we'll be able to leave an indelible mark on this history. Thank you.